Hey, what's up everyone? Sean here at Warrior Trading, and today I want to go over the opening range breakout strategy. It's a really popular one, so I want to go over it and show you guys how you can use it. So what is an opening range breakout? An opening range breakout is a fairly simple trading strategy that involves taking a position when a price breaks above or below the opening candle's high or low. This can be used for different time frames depending on your style and preference, but the most popular seem to be the 5, 15, and 30-minute time frames. This strategy is used as an intraday swing trade with the idea the stock will continue in the direction of the breakout for the remainder of the day. So let's have a look at an example here. This is a 30-minute chart of the SPY. And I have the pre and post market data off. So this is one trading day, and then this is the second trading day. So what you want to look for in an opening range breakout is you want to look for a stock to be gapping. As you can see, this was the closing candle here, and this was the opening one the next day. So we were gapping up. Ideally, you want the stock to have a news catalyst, and you want to look for the opening range breakout to break in favor in direction of the gap. So we're gapping up here and it breaks out to the upside. So this is what you want to see. The way that this works is you would enter the trade. So this is the first 30-minute candle. You wait for this to close. Once this closes, you want to see it break. Since it's gapping up, we want to see it break above, which it does here at 260.97. So you'd be looking to take the trade long as it breaks through this level here, through the highs. You also want to see elevated volume. So you want to see higher volume than normal, confirming that there's a lot of people watching it, that there's people taking size in it, and it's likelier to continue on the breakout. And then the way you want to place your stop is so if we were taking this long, we want to place a stop at the low, which would be 260.66. And say, for instance, this was gapping down and it breaks to the downside, you'd put your stop at the high of that candle. So it's really easy to know, to manage a trade, because you know your entry and you know your exit. So as soon as you get into the trade, it's fairly easy on how to manage it. And then as it breaks in your favor, you can look to take profits according to your trading plan. You know, you want to do the 2 and 3 to 1 risk reward ratio. So as it moves up, when I take profits at the 2 and 3 to 1, I usually move my stop up to break even and let the trade ride out for as long as I can. And as you can see, this trade, trended up for most of the morning, had a little sell-off, and then at the end of the day, continued really strong. And a lot of traders will actually do like a market on close trade with these and just, wait for the closing print to get out, or the closing minutes to get out of their position. So this is the opening range breakout. This works on any stocks. The deal behind it, though, that makes it work well is when there's a catalyst and there's high volume on, when there's a lot of people watching it. So you look for the breakout above the highs, stops at lows, and you try and capture, you don't have to catch the whole move through the whole day, but you want to catch a big portion of it. So you want to leave the trade on as long as you can. So some tips for trading the opening range breakout. Look to trade the opening range breakout in the direction of the gap. That's really important because you want to be trading in favor of the trend and what it's doing. If we're gapping up, we want to be trading to the upside. If it's gapping down, we want to be looking to get short. And if it doesn't break to the downside if the stock's gapping down, then you don't want to take the trade. Ideally, you want to see high relative volume, 2 times or higher. Normal volume is ideal on the opening candle, and it seems to work well when the stock is breaking out of consolidation on the daily. So if you see a stock, forming a flag or has been consolidating between 2 levels and it's breaking out from that consolidation, then it tends to work really well, and you can look at taking an opening range breakout trade. So that's the opening range breakout strategy. If you have any questions, let us know in the comments below. All right, have a good one, guys.
Oh hey, I didn't see you there. Well, I was just working on the dream board for my next home run trade. Hopefully it comes soon. Until then, make sure you subscribe to get email alerts anytime I go live or upload new videos. Until then, happy surfing